Long-term care and planning for long-term care is a crucial part of considerations that must be made during the retirement years. It is that guaranteed that the longer you live, the older you will get, and the better chances, especially these days, you'll be receiving some form of long-term care, whether that means going into a facility or outside of the facility, somebody coming to your home. But one of the things to consider is that this is not covered by your insurance, it's not covered by Medicare, and it's not even covered by Obamacare. So you basically have two options to figure this out, or to pay for it. It's either pay for it out of pocket, which again is very expensive, or insure all or part of the cost by buying some form of long-term care insurance policy. For the most part, we work with our clients and encourage our clients to obtain some form of long-term care coverage, as the cost of insurance, no matter how much you hate it, will be a lot less than paying for the coverage, paying for the nursing home stay or the home health care stay for an average amount of time. Now, unfortunately, this year many companies have left the long-term care insurance space or industry, as they have figured out that over the years they basically undercharged its insured to provide the benefits based on demographics of the populations, as they basically don't want to take on any more additional risk going forward. So they've begun to either get out of the long-term care insurance space, and those that have stayed in the space have begun to raise their premiums to its customers. Now, unfortunately, some of our clients have received some premium increases, a couple of which were upwards of 40%. So, realistically now, what do you do? Well, let's take a look at two real easy choices to make. For the first choice is to say, well, the heck with it, I'm not paying for it, and cancel your policy. Well, this is probably the most emotional, might be the most irrational, worst decision to make, because now you don't have a policy and you have to carry the cost of or the expense of it all, and for you and your spouse, all by yourself. On the other hand, you can say, well, the opposite side of the spectrum is say, well, okay, I'll accept the increase and pay for the whole thing. Two easy choices. Take it or leave it. Now, let's take a look at really what you ought to do. You have to understand that long-term care insurance is no different than any other type of insurance that you pay for, whether it be your house, car, or plane. The insurance company promises it will pay a benefit based on the criteria that you and the insurance company agreed upon at the beginning of the policy. So, for example, the long-term care and a long-term care policy, the benefit amount is based on, let's say, $100 a day or $150 a day, $180 or even more. Okay, and they promise to pay this for a period of time. Let's say 2, 3, 5, 10, maybe indefinitely, depending on what you decided on early on. At the same time, sometimes there's riders attached to these long-term policies, and I guess one of the most popular ones is an inflation rider that allows the benefit that you agreed upon to increase every year. And all of these things here, this is what I call levers, okay? These are the levers that you can take a look at to see how that affects your premium and hopefully get you back to a level that you feel more comfortable with. Maybe we want to reduce the cost of living adjustment, okay? Maybe at the time that you purchased the policy, you felt that you wanted the insurance company to pay for 5 years. Well, maybe we relook at that, as the average stay at a facility is anywhere between 2.5 and 3 years. Okay, whatever it is, these are levers that you can adjust so as to possibly reduce your premium to a more comfortable level, thus allowing you to continue to maintain this valuable coverage. So I wanted you to give us a call in reference to this if you have any questions, and don't forget, always, we have 2 books this time. We have Dirty Filthy Lies My Broker Taught Me with myself and Mark Matson, and Mark Matson had another book this year. Mark Matson is our co-advisor, and how to outwit, outsmart, and outinvest the Wall Street bully. It's called Main Street Money. Any one of these books is available by linking up right here on our site. And I'll see you next time on Financial QB TV.